Most people see a financial statement and immediately feel lost. But don't worry, I'm going to change that today, and I'm going to use MTN's first quarter of 2026 financial statement to teach you. Every publicly listed company is required to publish its financial statements regularly. These documents tell you exactly how a company is performing, what it owns, what it owes, and generally how cash is moving throughout the business. There are three statements you need to understand in a financial statement. The first one is the income statement. The second one is the balance sheet. And the third one is the cash flow statement. Let's go through each one by one using the MTN's financial reports. The income statement answers just one question. Did this company make money during this period? That's it. So what do? You start at the top. Revenue. MTN Nigeria generated 1.498 trillion naira in revenue just for the first quarter of 2026. That is your starting point. Now that we've established what the revenue is, we work our way down, okay? So after revenue, what does the company do next? They pay their costs. It could be salaries, company costs, it could be new machinery, new equipment, it could be anything. Everything that they need to sort out, bills, it could be light bills even. Just general operating expenses. So after all that is paid, whatever is left is now called the operating profit. And in this case, MTN's operating profit was 632 billion naira. That's after all these operating expenses were paid and done for. The remaining was 632 billion naira. This is out of 1.498 trillion naira. Okay? Are you following? Now that we've established operating profit, we now account for finance costs, which are essentially the cost of borrowing money or any foreign exchange losses or gains. MTN actually recorded a foreign exchange gain of 33 billion naira just this quarter because the naira strengthened a little bit significantly. Now, after all of this, you now get to profit before tax. And in this case, MTN's profit before tax was 546 billion naira. Then what do you do next? You deduct tax, all right? And whatever remains is profit after tax. And in this case, MTN's profit after tax was 355.5 billion naira. That is the bottom line. That is what MTN actually kept. That's what they made in the real sense this quarter. But the number that you're supposed to care about the most as an investor is earnings per share. And for this, MTN was 16 naira 95 kobo this quarter, compared to last year's 6 naira 37 kobo. That is a 166% increase in 1 year. The balance sheet is a snapshot of the company's financial position at a specific period. So it basically shows you assets, which is everything the company owns or is owed. That's basically people that are owing them. Whatever, everything combined is their asset, because even though it's not in their hands right now, people are owing them, so it's still there somehow. You understand? Or it also shows you liabilities, which is basically everything the company owes other people. The difference between the two of these things, the assets and liability, is called the equity, which basically belongs to shareholders. MTN's total assets as at March 31st, 2026 stood at 5.849 trillion naira. Their total liabilities was 5.945 trillion naira, which basically gives shareholders the equity of 903.9 billion naira, which is basically a 64.7% increase from December of 2025. One major thing I always check on the balance sheet is the borrowings. Yeah, the borrowings. MTN has reduced its total borrowings to 527 billion naira in December 2025, down to 377 billion naira as of March 31st, 2026. They also repaid all their foreign currency loans this quarter, which means that they are no longer exposed to exchange rate risk on their debt, which is a very healthy sign. Now, the cash flow statement is my personal favorite, and honestly, it's the most underrated of the three. Now, here's the thing. A company can show you profit on paper, but they'll still be running out of actual cash to spend. The cash flow statement tells you the whole truth. There are three sections: operating cash flow, which is cash generated from the core business; investing cash flow, which is cash spent on growing the business; and financing cash flow, which covers borrowing and repayments. MTN generated 764 billion naira in operating cash flow this quarter. That means for every naira of revenue, real cash is coming in and the business is healthy. They also spent 682 billion naira on investments, primarily 428 billion naira on acquiring new network infrastructure and equipment. That is money going into growing of the business for future revenue. That is not a bad sign, that is ambition. Free cash flow, which is the cash left after operations and essential investments, came in at 326 billion naira, which is up 55.6% from last year. Free cash flow is what funds future dividends, debt repayment, and growth. When free cash flow is growing, the investor in you should take notice. So, whenever you pick up a financial statement of any company you're interested in or you've already invested in, check 3 things first. 1. Is revenue growing? 2. Is profit after tax positive and increasing? 3. Is free cash flow healthy? If your answer to these 3 questions are yes, yes, and yes, you are looking at a fundamentally strong business. And in this case, MTN basically ticks all 3 boxes this quarter. So that's it. Financial statements are not intimidating once you know what to look out for. They are actually the most honest thing a company will ever show you. Learn to read them and you will never invest blind again. Share this with your investment circle and don't forget to drop your questions below. And as always, follow me, like, share to anyone who fancies content that revolves around the US and Nigerian stock market. And I'll be seeing you in the next video. Bye-bye.